Hello financial investors and welcome to the channel. My name is Brent and in today's video we are going to be doing our stock market weekly recap for the 8th through the 12th of March 2021. This will cover week 10 here of 2021. What we're going to be doing in this video is going over our last week's changes, which are up on the screen now. We'll quickly cover that. Then we're going to go ahead and jump in covering the four main indexes, taking a look at the M1 Finance portfolio over the past week. That's something I like to include still in my videos. You know, I may not do my Monday buys series, but I still want to include the performance of that portfolio because I've been doing it on a weekly basis over the past 3 years, and I'm going to find a way of, you know, hitting it maybe every week, just discussing it here, or maybe just making a video throughout the week on the performance. And then we'll take a look at the S&P 500 performance of the individual stocks and sectors overall, and take a look at oil, dollar, silver, gold, bonds, the 10-year yield, mortgage rates, and we'll also be talking a little bit about some news this week, so stimulus checks, so that all started rolling out here on Friday. So if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video, and of course give this video a thumbs up, make it blue just like on Facebook, and let's go ahead and get into the video. Okay, so last week, the 1st through the 5th of March was week 9. The market was pretty mixed. Tech stocks had been down, but we saw financials and oil, energy, a few utilities were very positive. So it was a pretty halvesy market where we saw the majority of the indexes were either positive or flat, with tech hanging back. So S&P was up 0.81, the Dow Jones was up 1.82, the Nasdaq, that tech heavy index, was down by 2.06, the Russell 2000 was kind of flat, down 0.4%, and Bitcoin had jumped from roughly 44,000 and some change to over 49,000, nearly 50,000 last week. I believe this past week it had hit around 56,000 again. So, you know, it's pretty crazy on the Bitcoin. Silver, gold, and bonds had moved down, with silver moving down over 5% last week alone. 10-year rates had moved up nearly 10 basis points from 1.46 to 1.55, and mortgage rates remained about the same from a week ago, from 3.18 to 3.16. So I know a lot of individuals are still going out financing their homes, and they're noticing that they're getting rates in the 3% range, anywhere from 3.25 to 3.5 versus just a month or so ago when they were down getting them into 2.25s, 2.75. So it's really interesting how fast that 10-year rate has moved just within the last few months. I still was able to lock in at a 2.75, so I'm very happy about that. Okay, as far as some news that we posted this week, you know, the big news was, of course, stimulus checks. So I saw stimulus checks were starting to roll out on Friday. A lot of my coworkers, while I was at work the one day of the week, you know, I decided to go in. We had our coworkers were kind of going, hey, you know, the stimulus checks is rolling out, it's showing up on my account. And then everyone in the whole office was checking out their bank accounts, looking at stimulus checks were rolling in, and there I was sitting there. You know, I didn't get a stimulus check. But there is a way that you are able to check when you do get a stimulus check. So if you do go over to the Facebook page, click on this link. I'll have a link. I think there's a link down in the description below to the Facebook page. But if you haven't got your stimulus check, you can actually go here. You enter your social, when you were born, and your address. And then it tells you which date you're due for a deposit this upcoming week or so. So, you know, all that is available there. I shared that over on Instagram as well. So that is the biggest news, I think, this week, was that we discussed last week. The Senate had approved the bill, then it was going to go back to the House for final approval, and then over to the President. So all that happened really quickly, and those stimulus checks started getting rolled out on Friday, and they should continue to get rolled out here into this week and potentially the week afterwards. Just depends on just how fast that all gets moved. So kind of interesting. So that's the biggest news, I think, that was kind of discussed this week. Jump into covering the indexes. So S&P 500 this week was up nicely, up 2.64%. So a big recovery from, you know, a couple weeks of, you know, negative. I did see a double bottom here, and then we had you know, what looked like maybe another double bottom, but not as low. So here, this second bottoming out point was lower than the first one. So that made me think we were initially going to go further down here in March, but then, we had a bit of a dip there, but it didn't quite retrace to the, where it had fell down before. And the market just been kind of shooting up again. On Thursday, we had hit a new all-time high here recently. So if we go to our 5-day chart, we'll see here that on Thursday, we had a high of $3,960 is that high of the day, and that is the all-time high at the moment. So on Thursday, it hit a high, but didn't close at that high. So that's how it goes. So that's the high right there, up 2.64% on the week. Year to date is up 4.99%. So very nice recovery there. I still think there's a lot of room for the market to go. I'm not looking at the S&P 500 putting on, maybe 20, 30% again this year, but anywhere from say 7 to 15%, I believe that is totally doable, especially, everyone's been making videos about inflation right now on how it's kind of coming back. So there's a lot of discussion going on right now with all that money being printed and, inflation and such. The Dow Jones this week up 4.07%. So not a single red day here within the Dow Jones. So positive across the board, up whopping 4.07, puts that up year to date by 7.10%. So it is currently beating out the S&P 500 performance. Now we have our laggard, our fourth place this year now. So tech stocks had been a blast back in 2020, but this year they're taking a bit of a step back. For right now anyways. They are positive by 3.09%, but year to date, they're actually in last place, up 3.35% year to date. And then our first place winner for the week and overall performance for the year, we have the Russell 2000 up a whopping 7.32%. So another index where it was positive every single day, and the Russell 2000 has been doing really well over the past, year to date, obviously, but I believe it kind of lagged behind back in 2020 just because of all the small mid-cap businesses that had been shut down, that had been affected by, the illness that had taken over the world. And year to date, the performance is up 19.14%. So this is definitely the place to look for companies that haven't fully recovered, obviously. So look out there in that small mid-cap index. I know I've been buying up some MEI. Lockheed Martin's not very small, but I did buy some more Lockheed Martin. I do plan on buying a bit of Apple. I sold out of my position on Avi, so I posted that on Facebook. We'll take a look at that here towards the end of the video. But I did sell out of a good portion of positions and just took profits on Friday. Not on the M1 Finance account, but over on Merrill Edge. Now, taking a look at M1 Finance, I still want to include this in my videos somewhere along, on a weekly basis, just because I think that this portfolio is important, because I created this here on the channel to kind of show what a portfolio can do if you're adding in $115.38 every single week to max out the Roth IRA. And in this case, it's grown to nearly $31,000 worth of value, but we also have about $1,400 of cash in the account, and that is because the M1 Finance actually sold out of Eaton Vance, where it was transitioned over to Morgan Stanley, and then because I didn't have Morgan Stanley in my portfolio, M1 Finance sold all those positions, so that's why I have all that cash available on hand, ready to invest here in the portfolio. So overall, we're up 56% in this account with about $1,400 sitting in cash. If we take a look at our three biggest winners and our three biggest losers, we have Apple, ABM Industries, and Main Street Capital as far as the three positive winners. Now, negative. Now, this is kind of interesting because we did have a few other positions that had moved up. So we recently purchased ticker symbol MEI in our portfolio, and that thing's already up nearly 21%. But Simon Property Group has been roaring back. It was down, I believe, 60 or 70% at a time. So it is now down roughly 27.5%. WACO Group was down massive around 30%. It's now down around 9.18%. Consolidated Edison had been positive in the past, but it is now currently down by 4.32%. 9%. Now, a couple of the positions that I do want to move positive and then eventually get rid of are positions such as AT&T and Altria. Now, these positions do show us positive here at the moment, but if you do dive into them individually, you see that the market game is negative 101, whereas it is positive because we've earned dividends while holding this position of $131. But I do want to wait until the market gain does fully recover to being positive, not only have it positive because of those dividends, because I didn't reinvest those dividends into AT&T, but the same thing goes for Altria. Eventually, when Altria does recover, say we put on another couple percent, it will fully recover, and I'll eventually move out of Altria. I'll eventually move out of AT&T. I will probably move out of a few positions. There are positions that I do want to eventually just kind of remove from the portfolio and move into something a little bit different. A couple of these obviously down towards the bottom. I am going to eventually move out of utilities, move out of some of the communications and tobacco, different little positions. I want to consolidate this portfolio to make it the strongest it can be while investing in companies that I believe for the long term that won't have as much risk or issues. Cisco, I purchased that when it was in the negative and it's up again some crazy amount. So I'm really happy with this portfolio. Over the past week, it is up 4.3%. within the single week there. So it definitely keeps up there with about the same performance of the Dow Jones, a little bit more, but it's give and take there with the performance. Now jumping over into the S&P 500 performance here for the past 1 week. So this is the 1 week performance. We can see that Tesla's the big standout here that I was looking at this past week. I know my buddies on Facebook, my personal friends, we had been discussing some stocks that were down. Tesla was beat up some 20-30% over the past week, and then just over the past month, and then this past week, 1 week alone, up 16.02% in a single week. We also see some recovery from Amazon, recovery in Microsoft. Apple still was down by 0.32%. This is why I'm kind of interested in buying Apple at this moment. It could continue to dip, but I owned quite a bit of Apple in the past, and I had moved into AVI, and AVI had run up to about 108 and 110, and it's been having a lot of resistance, breaking above or retracing back to 110, whereas Apple isn't trading near highs at the moment. Now, it's close to highs, but not approximate highs. So I do want to move a little bit more cash into Apple. So I do plan on buying Apple here. On Monday, I'll probably put in a buy order of anywhere from 5,000 to 6,000, just straight up Apple, and just kind of hold that position, long term. And we have Facebook and Google. Facebook has had some recovery, and Google down 2.25% this past week. Now, I'm kind of looking at the 1 month performance. So a lot of the havoc within the tech stocks happened about a month ago. So Tesla is still down roughly 13, nearly 14% there, still on the 1 month. So even though last week they made a 16% recovery, they're still down for the month, roughly 13%. Microsoft is still down by 2.91. Apple still down by 10.61. That's what makes me want to kind of get back into Apple, just because it's kind of pulled off its highs more so than AVI has. So AVI here, it's trading at 108. I put a limit sell on AVI at 108, and I sold out of it on Friday. And its resistance point, it hasn't been able to retrace up to 110. It hit 110 and some change for about a day, and then retrace, and then just hasn't been able to come back up to that point. So Apple, I see that there's more opportunity there in the short term, and long term wise, I believe that Apple, has more room to grow long term versus AVI, where AVI has been one of those ones where it really sits anywhere from 110 to 90, give or take. And we saw also Google still down 1.75, Facebook down 1.28, but they're not down. This is the monthly performance, so they don't have as much room to grow versus say Nvidia or Apple or Netflix, still down 8.09. So in this M1 Finance portfolio, I want to kind of still focus on dividends, not a lot of growth, but inside of my Merrill Edge account, I will probably pick up some more growth stocks and such. So that is the 1 month. So I don't know if there were any other big sectors. We can see some recovery here within the financials still. Financials had been doing amazing. Last week they were up nicely. Again, this week, Wells Fargo up nearly 7%. Citigroup up over 7%. We see utilities kind of popping as well. So overall, I see a lot of positive in the market moving forward. And if there are opportunities with those small mid-cap companies, this could be a really good time to gobble those ones up. Now, looking at oil this past week down 0.18%. Year to date up 34.38%. So essentially flat on the week, but given its performance year to date, doesn't have much room to grow. Let's take a look at the 6 month. Let's take a look at the 1 year. Let's take a look at the 3 year. Let's just take a look at this performance. I think it did a stock split as well. So this, I don't think we can actually look at maybe it did dip this. I thought it had a stock split. I'm pretty sure ticker symbol USO had a 11 for 1. So this is kind of throwing me off here. I know it did do a stock split. I'm just not sure how many shares per one it actually split by. And we see the dollar, looks like it did go down a little bit this past week. So it started around 91 and 91 and got a little bit lower. I'm not sure if it'll continue to go lower or higher. I felt like with the stimulus checks and the money getting printed out, I feel like the dollar would continue to get weaker. We're seeing inflation kind of poke its head around the corner. Silver up 2.91% year to date, down 2.16. I don't see a lot of investors right now buying materials. I do see a lot of them saying, hey, I'm going to be buying this. Or I did see somebody in a dividend group discussing how they're buying into gold miners. But I've just never been a fan of silver and gold and some of the miners. It just looks like the performance and the business model itself is really hard to understand how it'll shoot in the future. If you're looking at it 5-10 years out, where is the technology? I'm a tech guy myself, so I'm always looking at a business or just any product or service as far as what are they working on, what are they going to be working on in the future, how is this going to play a part in individuals' lives, their family, businesses. So it's always looking at the bigger picture of how a business model operates and how it'll become profitable and continue growing in the future. And gold up 1.48 this past week, down 9.46% year to date. Bonds down 0.53%. It was down negative last week as well. So it is down year to date by 4.01%. And the 10-year rate is now at 1.64, having moved higher. So it was at 1.55%. It is now at 1.64% there for the 10-year. So it moved up a few basis points there. And mortgage rates, if we're taking a look here, it rose by 7 basis points to now 3.23% there. So rates right now, you're probably going to go out there and get a mortgage. It could be anywhere from say 3%, 3.25 to even higher than that. So right now, I believe rates have raised almost 1/4 point just within the month. So it has been pretty crazy out there in the market. And there are a few other things. So here I posted a screenshot of Merrill Edge. I decided I'm kind of revamping my positions on a couple different portfolios and accounts. So here within the Merrill Edge account, I sold out of SPLV, Kimberly-Clark, AbbVie, also sold out of the ETF SPLV down here, SPHD, Kimberly-Clark, and Apple Hospitality. So these positions, a couple of them were kind of small, a couple of them are pretty large. I think Kimberly-Clark, I had maybe a couple thousand in that one. Kimberly-Clark and the SPLV, I don't think these positions were too large. I think I had majority of my Roth IRA was invested in AbbVie. I think I had purchased that one around 70 or 80 or so, and then I had sold it at 108 and some change. And we have the IRA down here. I am holding WACO Group still, so WACO has been having some recovery. We saw that over on the M1 Finance portfolio. If we take a look at ticker symbol, oh, there it was. Let's go back to WACO. So over the past week, this is the 1 week performance. WACO Group right here is up 10.25%. So, I'm going to continue to hold it. It's still down in this portfolio and it's still down in the other portfolio, but I'm going to go ahead and continue to hold this. I forget by how much I'm down in both of the positions and portfolios, but I don't plan to sell out of these positions until they fully recover. And with time, they'll recover. The money invested in them, it says right there, there's $838 invested in that one. So I may have invested $1,000 and it's down, to $838. So it is down just a little bit, but I still want to have that money just because I can't write it off. It's not tax harvesting. I don't get taxed on my positions in my retirement accounts, but you also can't depreciate what you've lost. So if I sell something at a loss of $300, I can't depreciate my taxes, or I forgot the word. I don't know if it's even correct by saying depreciate, but I can't say that I lost money in my retirement account and have that nixed on my taxes because it's inside of the IRA account. So I just want to make it back and then I'll reposition that capital later on. But everything else here, so I'm going to be buying some Apple within the IRA, and I'll have to find out what I'm going to be buying with the rest of the capital, but that is my plan at the moment. And our home was listed on Tuesday, so we were pretty excited to kind of move away from our current home. So we did list this is my wife, she posted that our little house is on the market. So we sold our 3-bedroom, 2-bath. We got it listed on Tuesday, had a few offers come in, and we are pending now as of Saturday. We made our choice. So that is all fun and exciting. And stimulus checks, we kind of discussed that a little bit earlier as far as the news of the week. And taking a look at the FANG stocks for the 1 month. So I just took a look at the 1 month performance versus the 1 week performance, kind of what we took a look at earlier. I saw that Apple and Nvidia were still down roughly 10% for Apple, Nvidia 13% for the month, but they are showing some signs of recovery. So if you guys are interested in Apple or Nvidia, this could be a good opportunity. I'm going to be buying some Apple this week. Tesla, had a big spike there of 16%, but it's still down for the month by roughly 14%. So it could make some recovery in the upcoming weeks as well. But I will leave you guys to decide if you're going to be buying anything like that. So that is going to be it for this video. Hopefully it wasn't too long. I know I looked down at the timer. It's 23 minutes right now. But I try to be a little bit louder in this video. I'm actually recording during the day, which is very nice. But that is going to be wrapping up this video. Let me know down in the comment section below if you are buying at this time in the market, if you are selling and locking in profits. I locked in quite a bit of profits on Friday. I'm still going to be locking in some profits over on the Merrill Edge account. I'm going to be, not Merrill Edge, I'm going to be thinning out some of the positions on the M1 Finance account, but I am going to be keeping a ton of positions as well. But I do want to thin this thing down. I think a lot of the positions are, I think I just have way too many positions, and I really want to focus down my portfolio for, the growth has been nice, but I want to look for those small mid-cap businesses, maybe within my Merrill Edge account, where I can more time my limit buys and limit sells and look for some good opportunities out there. So if you're looking at anything in particular that looks interesting, let me know down in the comment section below and I'll take a look at it. I know I've been looking at a couple different positions as well within the small mid-cap area. So that is going to be it for this video. Thank you all for tuning in. If you guys did enjoy this video, of course, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video. Of course, we talk about the stock market, real estate, entrepreneurship, personal finance. So that is it. Give this video a thumbs up and I will see you guys in the next video. Bye-bye.